Hey guys, hope you're doing well out there. Taking a look at Meta Platforms after they reported their Q3 2023 results, sending shares lower in the after hours by nearly 3%. That is after they were lower by close to 4% during the regular trade. Now that is on the heels of posting a beat on both the top and bottom line. We'll come in here, take a look at the key financial highlights, take a look at outlook comments made by the CFO, and take a look at the all-important Reality Lab segment and see how that is holding up over at Meta. As always, we'll take a look into the technicals as well. This one has been on a monster move higher and is now consolidating in this range. And we'll see if this can be a place where you can accumulate shares of Meta Platforms. As always, if you are new to the channel and find this type of content valuable, be sure to hit that like and subscribe button below. We are on the road to hit 600 subscribers and your support would mean a lot. Shares of Meta are up close to 140% year to date, and now finally that monster rally is taking a breather after shares are down nearly 7% in the trade and the after hours combined, close to $290 per share. And now revenues came in at $34.15 billion. That was up 23% year over year. Very strong growth on that top line for Meta. Estimates were closer to $33.5 billion, so nearly a $700 million beat on that top line. Cost and expenses are controlled over at Meta, and we see the results of those cost cuts finally come through as costs and expenses decreased 7% year over year and total expenses coming in at $20.4 billion. Now, another important number over at Meta was the ad impressions on their family of apps, which includes Facebook, Messenger, WhatsApp, and Instagram. That increased 31% year over year, but the average price per ad did decrease by 6% year over year. Now, one of the big reasons for that increase in ad impressions was likely due to Reels. And in the prepared remarks, Mark Zuckerberg did mention Reels, saying that Reels has driven more than a 40% increase on time spent on Instagram since launch. And that is likely the big reason why the ad impressions are up so much year over year. It's just that Reels is finally catching up to the expectations. Mark also mentioned that they have finally reached a monetization milestone earlier than expected and now estimate that Reels is net neutral to overall company ad revenue. And that is a big deal because Reels has been likely a money loser over the past few quarters. And finally, all that work spent into monetizing Reels is coming through and now is likely net neutral to ad revenue. And so the core ad business over at Meta is as strong as ever, and sort of Google results yesterday foreshadowed this as their ad revenues yesterday were very strong both on the YouTube and Google search side. It's just Google Cloud brought that stock down. Now, along with strong revenues and controlled costs, Meta repurchased nearly $3.7 billion worth of common stock, and they still have close to $37 billion left on that share repurchase. You see headcount was also down 24% year over year and is now close to 66,000 employees. That is one of the big reasons why Meta was able to control costs so well on that bottom line. Now, in terms of fiscal Q4 outlook, Meta did say they're expecting revenues to come in the range between $36.5 to $40 billion. Wall Street expectations were basically smack dab in the middle at $38.8 billion. Now, since Meta did beat by roughly $700 million on this Q3 revenue number, if you expect the same, they'll likely come in closer to the higher end of this guidance at nearly $40 billion. And so that will be a very strong number over at Meta. And considering their Q4 is the biggest quarter from a revenue and earnings standpoint, yeah, that should be very strong growth if they do come near the top end of this range. Now, if they do come near the bottom end of the range, that certainly will be disappointing considering this is a fairly large range, 36 to 40 billion. That's nearly a 10% difference in revenues. And so certainly Meta, I would expect, should come near the higher end of this guidance at close to $40 billion in that upcoming Q4. Now, in terms of expenses, they did lower their range of total expenses for 2023 to come in at $87 to $89 billion, lowered from their previous outlook of $88 to $91 billion. And so again, cost cutting over at Meta really shining through and completing Mark Zuckerberg's year of efficiency. Now, they did mention they do expect Reality Labs operating losses to increase year over year in 2023. And so when we come over to the income statement, we'll take a look at just how bad Reality Labs really is doing. They also mentioned Reality Labs, they expect operating losses to increase meaningfully year over year in 2024. And so again, Reality Labs is losing more money this year, and they expect those operating losses to increase meaningfully in 2024 as they continue to scale out their AR and VR ecosystem. And so we'll see really if that's the most efficient way that Meta can come in here and spend their money. Now, taking a look at these segment results, you see family of apps revenue is humming along just as expected. Very strong growth in that family of apps. Just a year ago, we were sitting at $27.4 billion. Now we're closer to $33.9 billion. So again, year over year acceleration. We even see quarter over quarter, that was very strong growth. But the thing that me and likely a lot of Meta investors don't like to see is Reality Labs revenues steadily decreasing over the last 2 years. Yeah, you see Q3 of 2021, Reality Labs was closer to $550 million. And then Q3 of 2022, they were nearly at $280 million. Now they're sitting at just $210 million. You see, even over the last 5 or 6 or 7 quarters, this has steadily been decreasing. And so you generate less and less revenue into the business segment that you're investing more and more into. Now, it doesn't take a business genius to understand that is a terrible, terrible business model that is bringing you less revenues on higher operating costs. And so something in this segment has to change over at Meta. I know they're sort of betting big on themselves, but at some point, at one point or another, Meta has to look at themselves. Mark Zuckerberg has to realize that he is experimenting over on this Reality Labs segment at the cost of Meta shareholders, considering that a year ago they were losing $3.6 billion on the Reality Labs business. Now they're losing $3.7 billion. So yeah, on lower revenues, they're losing more money. 2 years ago, they were losing just $2.6 billion. And so again, year over year, the operating losses over on the Reality Labs segment has steadily been increasing while the revenues are decreasing. Now, a big reason why this matters less than it did last year is because their operating margins are in a much better place. So last year, even the family of apps segment experienced slowdown in their top line revenues. And so this loss from the Reality Labs segment made up a bigger portion of their overall operating incomes. And so suddenly their operating margins are going from 20% all the way up to 40% just because their family of apps are in a much better spot on the advertising side. And so it's important to remember the bread and butter for Meta is still their core advertising business on their family of apps. When this segment deteriorates, yeah, suddenly all of the other segments over at Meta, such as Reality Labs, starts to look a lot worse because it eats into the operating incomes a lot more. And so while Meta can post strong growth on that family of apps side, yeah, they would have some leeway to experiment on that Reality Labs side. But keep in mind, look, if Meta did not have this business segment, yeah, they would have another $3.7 billion on their operating incomes. And so that could be returned to shareholders in many ways. But right now, what's happening with that is Mark Zuckerberg and Meta is basically burning that cash on a pair of goggles and on a pair of Ray-Ban smart glasses and hoping that will change the future. I do think at one point or another, Meta will have to look at themselves and consider maybe slowing down this business, considering just how much money it has been burning over the past few years. Now, on its family of apps, that is still doing very, very well. And so that certainly is a positive sign over at Meta. You see the family daily active people have been steadily increasing quarter over quarter and year over year. You see now nearly 3.14 billion people use one of Meta's products on a daily basis. And so that is a pretty staggering number if you really think about it. And so considering they have more users on their platform, that is likely also another reason why their ad impressions have increased year over year. Moving on to the statement of income. Now, year over year, these numbers look absolutely fantastic considering Meta is lapping a period of extremely slow growth. Same time last year, they had posted revenues of $27.7 billion. Now they're closer to $34.1 billion. So nearly a $6 to $7 billion increase on that top line. And it took them just another $500 million in the cost of revenues to generate that. So now cost of revenues are up to $6.2 billion. You see R&D hardly moved. Marketing and sales actually went down by close to $1 billion. And so now marketing and sales sitting at $2.8 billion. G&A also ticking down by close to 30 to 40% and is now close to $2 billion. And so you see your top line revenues grew by nearly $7 billion and your total cost and expenses actually decreased by over $2 billion. And so right there, that is going to cause your income from operations to absolutely explode over 100% year over year, coming in at $13.7 billion. Same time last year, we were at just $5.6 billion. Now paying some income taxes, you come down to a net income number, again, more than doubling from a year ago at now $11.5 billion. Your EPS on a diluted basis coming in at $4.39. Estimates over on Wall Street were closer to $3.65. So a massive nearly 76 cent beat on that earnings per share side. That is certainly impressive from Meta. I think even more impressive than the top line growth is how well they controlled costs, considering that 24% reduction in employees that has finally been paying off. I think Meta and really other big techs came to realize that they just have too many employees and they can make their business a lot more efficient simply by slashing that headcount. You see the weighted shares outstanding have been decreasing. We talked about that Meta buyback at the top of the video, and so they have continually bought back shares, even though shares have been rocketing higher, up over 140% year to date. Meta has been buying back shares steadily over the past quarter. Now taking a look at their balance sheet, still looks fairly strong over at Meta. You see cash and cash equivalents jump significantly from 9 months ago. It's now up close to $36.8 billion. Total current assets coming in at $78.3 billion. Total current liabilities sitting at just over $30.5 billion. So a current ratio well in excess of 2. They did pick up quite a bit more of long-term debt, nearly doubled their long-term debt from 9 months ago. I'm not really sure why Meta took on this additional debt. We'll take a look at their cash flows. They still have very strong cash flows, and so they can continue to fund their Reality Labs, their money-losing Reality Lab segment on their own, but I'm unsure why Meta increased their long-term debt by nearly doubled over the last 9 months. However, even with that, Meta still has a very strong balance sheet. You see total liabilities at just $73 billion. Their total current assets are in excess of that, and so when you see that right there, there's not much to worry about on that balance sheet. Now, moving on to their statement of cash flows, we see that $11.5 billion net income number for the last 3 months coming down here. We get to add back depreciation, share-based compensation, and some accounts receivables, and then we come down to a net cash provided by operating activities at $20.4 billion. Again, that's more than double from where we were same time last year. Now, Meta did use nearly $6.5 billion in the purchasing of property, plant, equipment. Year over year, that is actually a slowdown. So likely slowing down on that Reality Lab segment, or this is on their AI servers, considering Meta likely loaded the purchasing of their property and equipment likely in the first half of the year and the second half of last year. Now, they also repurchased nearly $3.5 billion worth of common stock in this most recent quarter, and so used nearly $11 billion of this $20 billion operating cash flows in the forms of investing and financing activities, and then they increased their cash pile by close to $8 billion in this most recent quarter. And so considering Meta still generated free cash flows of close to $8 billion, yeah, I'm not really sure why they felt the need to take on this additional $9 billion in long-term debt, especially considering the interest rate environment we are dealing with. But nonetheless, this stock has been on a monster move higher over the past 1 year. This has been the perfect example of a V recovery, and frankly, you don't see this very often in the markets. Likely last year, people mispriced the shares of Meta and oversold it, and now they have to recompensate for that as shares are over doubled up in the past 1 year. Now, in the most recent 3 months, shares of Meta have been consolidating in a sideways pattern in the range of really $280 to $320 per share. In the after hours, shares are closer to $290 per share. So again, selling off closer to this $280 support level. Now, I do expect Meta to come down here and bounce off these $280 support levels. Certainly, if you don't have any shares of Meta, you could maybe come in here and pick up one share at $280. Again, I don't think this is a screaming buy at these levels considering how much the stock has run up, and I do expect it to have some volatility and chop around sideways and really take a breather from this monster rally higher. Your upside really in the stock at these levels would be back up to $320 per share, so nothing outrageous, but I do see if Meta comes down and breaks this level at $280 per share, it does have a few levels of support before it really makes a big move downwards. The first level would be at $260 per share, and then lower at closer to $245 per share. Now these are a level where I would be more interested in picking up shares of Meta. Certainly, I think it can come down to these levels. From a long-term perspective, look, there's still a ton of good things Meta is doing, namely on their family of apps. We come up here and take a look at their income statement. Yeah, this is still fantastic. The cost cuts over at Meta have been absolutely showing through, considering that their advertising business is steadily increasing. There's still a lot of good things going on over at Meta, considering Reels has finally broken even on a revenue basis. Yeah, that is still very, very good to see. It's just the Reality Lab segment is the big question mark over at Meta, and really how much longer are they going to continue to lose money at this rate over at Reality Labs? That is the big question for Meta shareholders. Now, if that does turn around, yeah, Meta is likely still an undervalued stock. It's just now considering if those losses continue to get worse, if revenues over at Reality Labs continue to slide and the operating losses continue to grow, yeah, I could see Meta shares retesting these levels at close to $250 per share. And that, I think, would be a good point to begin and accumulate more shares in Meta. For now, I wouldn't be overly excited to come in here and pick up shares of Meta. I do think there is a lot of tailwinds on the advertising space for this company, and so they are doing a good job on that revenue side. And then again, controlling costs have been very good over at Meta. I do think they need to check that Reality Lab segment sooner rather than later in order to continue to see gains like this over at Meta. That was my take on Meta platforms. Let me know what you guys think of this one in the comment section below. As always, thanks so much for listening, and I'll see you guys in the next video.